The fossil fuel industry is no stranger to controversy.
Now, researchers have claimed that the oil giant ExxonMobil accurately forecast how burning fossil fuels would cause the planet to warm, going as far back as the 1970s.
Oil is about so much more than just what's coming out of the ground. Oil is about money, it's about politics, and it's about power.
The health and well-being of every person on the planet is at the mercy of the continued use of fossil fuel.
For years, it's been criticized for its impact on the environment, with many arguing that its profit-driven priorities have hindered progress toward a sustainable future. Recently, big oil companies such as ExxonMobil, Chevron, and Shell have reported bumper profits, around $200 billion combinedly, thanks to a rebound in demand and rising oil prices. Now, some may argue that the industry's financial success demonstrates its resilience and capacity for adaptation. Others, however, question whether this success comes at the expense of the environment and the urgent need for a transition to renewable energy sources. But while shareholders celebrate, the rest of us should be asking, what does this mean for the planet? As this debate continues, it's worth exploring what these profits really mean for the future of energy and the planet. And we need to look more closely at big oil's astronomical profits and how they relate to the energy transition. So, let's get started. In 2022, the 6 largest Western oil companies made more money than in any year in the history of the industry, largely from pumping and selling the fossil fuels that the world needs to replace to avoid climate crisis. If we look at the numbers, Shell, Europe's largest energy company, more than doubled its profits in 2022 to about $40 billion, the highest in its 115-year history. ExxonMobil expanded production in 2022, and its shares rose more than 50% in the year as it raked in a record $55.7 billion in profits. California's Chevron had a record $36.5 billion profit, and BP, another London-based firm, notched a $27.7 billion profit. And according to CNBC, altogether the top 5 big oil companies, Exxon, Chevron, Shell, BP, and Total Energies, reported combined profits of $196.3 billion last year, more than the economic output of most countries. In fact, following Moscow's full-scale invasion of Ukraine, political leaders from London to Berlin to Washington changed their approach last year, calling on companies to increase output or help them procure replacements for Russian fossil fuels. And this U-turn has dominated headlines, stirring anger from environmentalists. This dispute is especially heated in Western Europe, where oil firms have promised to reinvest earnings from fossil fuel assets in renewable energy, but have yet to deliver in terms of energy capacity. The energy giants have used their bumper earnings to reward shareholders with higher dividends and share buybacks, but their current investments in low-carbon technologies represent only a small fraction of their total capital expenditure. The world is facing a climate crisis, and transitioning to clean energy is crucial to reducing carbon emissions and mitigating the effects of global warming. The International Energy Agency estimates that the world needs to invest $5 trillion per year in clean energy technologies by 2030 to reach net zero emissions by 2050. As a matter of fact, most of the pledges made by the big oil companies were vague and slow to be implemented. In some cases, the announcements amounted to nothing more than greenwashing. And the result has not only been higher greenhouse gas emissions, but it has also been a massive transfer of wealth from households to some of the largest energy companies in the world. So the big oil's profits are like a tree that bears fruit, but slowly kills the soil it's planted in. The numbers may be impressive, but the reliance on fossil fuels is unsustainable and damaging to the environment. And this clearly indicates that the market was never going to solve climate breakdown, and it was either naive or, more likely, deeply cynical to pretend otherwise. They prefer profit over the planet. Now, you must be wondering why big oil companies continue to prioritize profits over the health of our planet, even in the face of catastrophic events like the Deepwater Horizon oil spill. This devastating disaster, which spilled millions of barrels of oil into the Gulf of Mexico, had far-reaching environmental and economic consequences, and it highlighted the risks associated with our dependence on fossil fuels. So there must be some other reasons along with profitability, right? Let's have a look at them. One reason why big oil companies may continue to prioritize profits over the health of our planet is the pressure they face from shareholders. Shareholders demand a return on their investment, and companies that fail to meet that expectation may face consequences, such as declining stock prices and less investment. The political influence on the fossil fuel industry is another significant factor in the prioritization of profits over sustainability. The industry has been accused of lobbying for policies that prioritize their interests over those of the environment and public health, and of using their financial resources to influence political decisions in their favor. Additionally, some also believe that big oil companies prioritize profits over environmental health because they're resistant to change. Transitioning to sustainable business practices necessitates considerable adjustments in business practices, which can be costly in the short term, so big oil companies may resist these changes due to concerns over costs and a preference for the status quo. Now, some of you would say that since the market frequently puts short-term profitability ahead of long-term sustainability, so it might not be able to resolve the climate crisis without compromising its profits, but that's not true. The big oil companies can actually play an important role in incentivizing the transition to renewable energy sources and promoting sustainable practices while maintaining its position as a key player in the energy market. How? Well, these oil companies can use their financial resources to invest in and scale up renewable energy projects. This will not only help to reduce their carbon footprint, but also contribute to the growth of the renewable energy sector. Moreover, big oil firms can influence lawmakers to support stricter climate laws and regulations. This will facilitate the transition to a low-carbon economy and foster the development of a more favorable environment for renewable energy. And this benefits not only the environment, but also the companies themselves, as it makes them more resilient to market shocks and helps to ensure their long-term prosperity. So, big oil companies have a unique opportunity to lead the way in the energy transition by investing in renewable energy technologies. While the pressure to maximize profits may encourage harmful practices, growing awareness of the climate crisis and the need for a sustainable future has led to an increase in demand for change. Big oil companies have a choice to make: continue to prioritize profits at the expense of the planet's health, or transition to sustainable practices that prioritize both profit and environmental sustainability. The choice they make will have significant implications for our planet and future generations. We hope this video has shed some light on the role of big oil in the energy transition. As we move towards a more sustainable future, the companies need to adapt and invest in renewable energy resources. Let's all work together to create a cleaner and more sustainable world for future generations. Thank you for watching.